Jackie Boyd, thank you for joining us on our podcasts, I think we call them now. The last one we did, I didn't know if we were allowed to call it podcasts. I didn't know we were podcast worthy, but now we're just going to call it that anyway. Jackie is and correct me if I'm wrong, Jackie is our risk and insurance manager.
That's right.
Jackie spent many, many years as an insurance broker, and we are so lucky to have her in our business and have that knowledge, and we're proud to have you as part of the team.
Thanks.
So I thought it'd be good to get Jackie in and just have a chat around misconceptions of underinsurance and some insurance, a bit about that. From your point of view and from what you've learned over the years being an insurance broker.
Well, thanks for having me. Thanks for giving me a job. As you said, I've been working in the insurance industry for a very long time, but the biggest misconception has really been about setting sums insured post-earthquakes, where the insurers moved from a floor area replacement to a sum insured. And living down in Wanaka, I found that a lot of clients were just balking at the idea of 2,000 a square metre, which was the default sum insured at the time. And that's when I first met you.
Yeah.
And you made a big problem disappear, actually, because that was a real big problem for a lot of clients trying to understand how to set their sum insured. A lot of houses were getting built down there as well, so a lot of people were just using their build values and then trying to slip into the inflation increases, but still found pretty quickly. I had one client who had built a house, used that value. We added roughly 20% for inflation and demolition costs. It was all very raw maths. I know a whole lot more now, but that's how we used to do it. And I think it was only about 4 years later, she decided to have a construction cost consultant's rebuild valuation done and found that the sum insured actually should have been twice the value.
Wow.
I know, it was huge. I think she paid about 1.3, something like that, to build the house initially. It got to about 1.5, something like that, with the inflation provisions. And the valuation came in closer to 3.
Wow.
Yeah, it was. Well, she became a really big advocate for me as well, because she could see the value. She took it back to her builder and said, "What do you think about this? Is this, how do you think this sort of stacks up?" And he said, "Yeah, it looks right." I mean, the market had changed dramatically over that COVID time. There's a lot of issues around supply and prices were going all over the place, and everybody seemed to lose the grasp, I guess, of how much it actually cost, even if they'd gone through that process themselves.
Well, thanks for saying that we got it right. That's the whole point.
Well, exactly. I have every faith that we get it right every single time. So that was actually a really big endorsement, and continue to use construction cost consultants on that basis.
That's quite a common thing at the moment, isn't it, that you're seeing and hearing? I know you talk to me a lot and saying this one's way underinsured and that one's way underinsured. So it's not a once in a blue moon thing. It's a lot.
It's constant. Underinsurance is massive in the whole market, and Cordell Calculator, I think, is probably the biggest blame tool, I suppose. Not sure if that's quite the right term, but there's insurers actually advocating to use Cordell, and we're seeing time and time again that it's just totally inaccurate, well undershot. Yeah. We've had clients come back to us after using calculators, setting sums insured and getting our valuations, and saying again that they're up to half the value of what they should be.
Yeah, I was sitting talking to Brett about this the other day there, and Brett's done a bit of a study on it for us, on the Cordell calculator versus where we are, and his overall over many, many properties was about 55% underinsured from using the Cordell calculator.
Yeah.
55% of value, that's huge. That means you have to have that in your pocket if something happens.
Absolutely.
What you had. And that, we just found that to be, we've got a lot of insurers and banks actually asking us to assess the Cordell calculator and against what we see in the market, and there's a huge difference.
Yeah.
So the FMA are bringing in early 25 some new regulations around it, so it's called coffee, and it's about them having to, they recommend or have a link on their website to somebody like Cordell who they know is not right, then they are responsible for it.
Fantastic.
So that's some new regulations that are coming in that I've been talking to some of the insurers about, And they're worried about it
Of course.
because they know that it's not right.
Well, it's all over the Cordell fine print that it's not deemed to be accurate. And if you want an accurate valuation, you should seek professional services.
And I wouldn't just say it's all Cordell, though. There is other calculators out there, and they're worse than Cordell. The best of the bad bunch is Cordell, and it's probably the most widely known one and widely used one.
I think the biggest query, I guess, for a lot of homeowners out there is actually about who is responsible for setting a sum insured. And I know a lot of clients out there are worried about how much their insurance is actually going to cost, but to be underinsured can cost them drastically. I mean, we've seen so many examples in the media, and thankfully I haven't had a client that has been a total loss since the sum insured has been created. But for the sake of another $100 or a few $100 every year to actually secure the most precious asset.
Exactly, Jackie. That's what people panic. They think that your friend, your client, when you were a broker, it went from 1.3, 1.5 million to 3.2 million.
Yeah.
And people think, oh my goodness, my insurance is going to go from 2,000 to 4,000. And when... How does that work, Jackie? Can you tell us about that?
It doesn't work like that. I mean, the biggest risk is the first probably 50% of the sum insured anyway, because the majority of the insurers are actually facing partial loss claims, not total loss. And so most of the time, if you've got a partial loss, of course, your sum insured is always going to be adequate. But time and time again, we're finding the amount of total losses is going through the roof. I mean, 16,000 homes were affected in Christchurch earthquake. Right. I don't know what they were in the Auckland floods or Cyclone Gabrielle, but in the media they did quote 2.3 billion of underinsurance after those losses last year.
That's a lot of money.
Well, it's huge. So the insurance is there, but it's not enough.
Do you think that if these people aren't they are underinsured, do you think that we as a country have not helped by the government actually paying that? So at the moment, in Christchurch and Gabrielle, the government have come in, and correct me if I'm wrong, the government, people that are not insured, the government have just funded that back up. So is it okay to be underinsured then? Is that what we're telling people?
It's the message that's coming across, isn't it? It infuriates me from my previous life as an insurance broker.
Yeah.
And I actually thought that we were all responsible for looking after ourselves. That's how this nation really was created. But becoming a state of emergency, and like you say, the government handing out the funds to look after people that haven't got it right or haven't insured themselves, I should say, because the people that have underinsured, they've tried to do the right thing and then still have been undersold. So, no, it infuriates me.
So the hard thing is, from what I've seen, and it sounds like you're the same, is how do we teach people about sum insured? Because we've had many people over the years, 2013 or 2014 now, 2025, sorry. 2025 moving into 2024 moving into 25. I'm not very good with numbers.
Funny that. I don't believe you.
And we're still not, you know, I speak to friends about it and they go, well, I know about it because you taught me about it.
I know.
I had a friend I was talking to the other week there who's got a lot of businesses, and he owns a lot of commercial property and a lot of residential properties, and he went, I only know about it because of you. I actually don't know what to do. So when his broker tells him, he's like, I don't know what to do because nobody's telling him what to do. And that's very common. People just don't know what to do.
It does feel like it's constant education. Like going around the country now talking with brokers, and there's lots of brokers out there that don't really know how to talk to their clients properly about covering their risks. It's all about how much they're paying. And I learned that a long time ago, that a client will always look at how much they're paying when they've got the insurance bill. They never look at that, funnily enough, when they have a claim. They always want to know what the sum insured is and to know that their losses are going to be adequately covered.
How do you think that these brokers that don't know, and there's a lot of new brokers in the market.
There is.
Things. How do you think, because they have to do their training now to be a broker?
Yes, the level 5.
The level 5. So as part of that, would it be good for something about underinsurance and things like that to be in there? Yeah,
it would be actually. It hasn't been that long ago that I had to complete my level 5 when they changed the compliance, and I don't actually think it was covered off at all. It's always a big part of the advice is to make sure that you establish correct sums insured. And in the commercial space, they've been asking for valuations for years. And the insurers are starting to drive it again by asking for residential valuations over certain levels. But I think for the general mums and dads out there, they are trusting, I guess, the insurer, which are then leading them to a Cordell calculator or asking a broker, potentially, that...
But 80% of the country insure direct.
Yeah, well, there you go.
So
huge.
And a lot of them, direct people will be through banks.
Yes.
And then we've got banks even giving people advice on what they should be doing with some insured. How do you feel about that?
Well, they shouldn't be. It would be really good with this change with the FMA. I think that will make a big difference, that they'll have to take some accountability for what they're doing. I've seen it time and time again. People just don't know how to set their sums insured. A lot of them just think about how much they owe on their property, how much they paid for it. They look at their rates demands, things like that. It's all incorrect. And of course, it is the property owner that's ultimately responsible for setting their sum insured.
Yeah.
It's their policy, their property, their policy. They have to take responsibility for that, but they're asking the questions and not necessarily getting the right answers.
Or knowing what answer to expect.
Yeah, well, that's what they don't know what is. Even if they get a number, they don't know if it's actually accurate.
Yeah, but we did some research out into the market, and we employed a research company that went out and asked a lot of questions for us. And one of them was, who do you think's responsible for setting your sum insured? And 46% think thought it was their insurance company.
Yeah.
It's in the 40s. I think it's 46%. But then another 20-odd% thought it was the bank.
Wow.
So people still don't know.
I still get asked, well, people make the comment of, I can't believe that they're willing to insure my house without actually coming out to see it.
Yeah.
And, that's when you just say, well, it's entirely their responsibility and it's just news to them. So, it's fascinating, all right? But that's where we fill a niche in the market.
Yeah.
Like you say, it's how do we get the word out there? And at the moment, it just seems to be one conversation at a time.
Well, Jackie, having people like you on board helps with that. So that's why we've employed you, and we've got Tash, with both of your insurance background. Brett and I are more construction guys. I'm a quantity surveyor, as you know.
Yeah.
And Brett's, I think Brett's something, stonemason or something like that. No, he's a construction guy. You can tell that when you look at him. It looks a bit rough.
Yeah.
So that's why you're coming in and helping us understand what actually comes in from an insurance background and how you think is very different from how Brett and I think.
Right.
Which has helped us grow the business, and we're growing, and that having that knowledge has been fantastic for us in the business.
Yeah.
So on the future of getting people some insured, I mean, what about commercial properties? How do you feel? So commercial properties is a totally different anomaly, isn't it? Tell us a wee bit about commercial stuff.
Well, I've learned a lot more in this space this year with working with you guys. Traditionally, like I said, commercial valuations have always been requested by insurance companies every 2 to 3 years, but there was nobody in the market offering that service, so the registered valuers clicked in from the market valuations to fill that gap to do insurance valuations, but they don't have any construction background, so I'm not quite sure where they get their numbers from. But we have found just more recently that they've had very high inflation provisions post-COVID, and then they've actually compounded over the last 4 years to now we're seeing a constant where our valuations are actually coming in lower than a registered valuers, because we're using much more accurate current figures.
So what everybody likes to hear a bit of the extreme cases. So tell me some real high numbers. What are people overinsured by? How much are these poor customers paying more than they should be?
I don't know about the premium side of things, but the values are horrendous. Like, again, it can be as much as 50%, but we did actually have an example.
50%?
Yeah.
That's a huge amount. So if you've got a $5 million property, commercial property, actually, it might not be $5 million. It could be $2.5 million.
Well, that's an example we did have out of Queenstown, Wee Childcare Centre down there. And it was insured for $5.2 million. And we were asked to come in and do a valuation. And I think our figure came in at about 2.8. So you're drastically less. And of course, the broker queried, wondering if we'd perhaps made a typo. And he...
Understandably.
He gave us the previous valuations from 2020 and 2022, and that's when Scott, our QS for the insurance, he actually went back, looked over the figures, and could see that anomaly. I think anomaly.
You don't have that word in the South Island.
It's a one word I should just avoid using it. You could see that after COVID, that had used figures of high, inflation provision as high as like 20%, but then their brokers were using a bridge of an inflation provision in between. Got to 22, they'd used high figures again, high again in 23, and it just had compounded, and you're talking about millions of dollars, so 20% a year.
Huge amount. Especially when you run a business. I mean, we all know it's tough at the moment out there running a business.
That's right.
It's really tough to make money. It's tough to keep people employed.
Yeah.
And you're paying way over what you should be.
Exactly.
It's a total other end of the residential market.
It is, absolutely. And actually, you'd find that if you're that high, so much over insured, you'd see a massive impact on your premium because it is rates-based.
Right.
So that does actually have a much bigger effect than a house insurance would be on the scale.
And then you've also got the fire service levy as well. So you're paying fire service levy on 5 million instead of 2.5 million. That's a big saving as well.
Huge. Yeah.
So overall, the saving would be huge for that client.
Yeah. I actually got an example from another broker who had received a registered valuation. He'd actually put us forward, and the client said, no, I've got a relationship with a registered valuer. I want to go with him. When did it? Got the valuation back, and the broker said that the his premium had gone up by something like 75%, but the value was 65% of that increase. So he said, hey, look, it's only going to cost $1,400 to get these guys in. Why don't we do that for a second opinion? If it doesn't work, I'll pay the fee.
Right.
And he got the valuation done and got the figures back, and he actually gave the client back $5,500.
Wow.
Yeah, so the increase actually was about 35% from what he paid the year before.
That's fantastic.
Well, it is. It's awesome. And in that particular case, it was a not-for-profit. So $5,500 is really, it's significant money for all of us, to be fair, but for them, it's really going to make a difference. And it makes me feel really good when you hear those stories coming back to know that you are really making a difference for people's bottom line.
So really what we're saying is the valuers over the COVID period were reading the papers and not listening to what was happening. Because we all read the papers. I read papers, I'm reading it, and it was telling me things like coppers went up 40%. And then I'd look at myself and go, well, how much copper have I got in a building? It's probably 0.00% building, so it got up 40%, didn't make much difference. Steel went up. Yep, some things did go up, but it didn't go up to the scales, and it didn't continually go up. So if they read it went up, from what I'm hearing from what you're saying, they read it went up 20%. They would add that 20% on, and then the next year they would add another 20%.
Exactly.
Next year, so that went on for 4
years. That's right.
That's a lot of money that you're adding on when you don't know where it is.
I know, it's unbelievable.
So the difference with what our QSs are doing, they're actually seeing what's happening in the market and know what the increases are and just adding it there. So it'll be 5, 6, 7%. I think the industry went up to 8% at one point.
Yeah.
But we're marketing that and pushing it for the next 2 years and saying this is where we think it's going to be, which is what QSs do.
I was going to say, and the QSs are working in the market all the time. So working in the real world, using real world figures and seeing those trends, if you like, for their inflation provisions, and far more accurate, obviously.
Thank you, Jackie.
No, my pleasure.
It's been very good having you spend 3 hours on a flight to get to Auckland to come and see us. It's always really good to have you in the office up here. Have your smiling face and giving Brett grief. That's always good to see. So thank you.
You're welcome. Thank you for having me, Andy.